Hello, and welcome to myfinanceteacher.org. Let's have a look at a general market overview today, looking at actually quite a few assets. I'm going to start today with looking at the US dollar. US dollar is in an ongoing short-term daily cycle that has been going on for 32 days so far. Looking at a couple of previous intermediate term cycles, we see that at least since late 2018, usually these shorter term daily cycles lasted for about 2 months, about 59 days. Although sometimes, of course, we can have relatively short cycles. The shortest within these last two intermediate cycles was 43 days. The fact that we are now on day 32 of an ongoing short-term daily cycle means that we're coming close, probably, to the end of this cycle. And I would expect some sort of a bounce in the US dollar sometime over the next several days, maybe over the next 1 or 2 weeks. And besides the cycle duration, which is still relatively young, a couple of other factors, of course, as you can see from the chart as well, that possibly point to a bounce in the US dollar coming soon are the RSI. The 14-day RSI is already into overbought territory. 14-day RSI is at 25.4. And secondly, over the last few days, we've seen many pokes through the lower range of the Bollinger Bands. And we've actually seen 1, 2, 3, 4, 5, 6, 7 consecutive red candles on the US dollar. And this, of course, can't continue forever. So sometime soon, I think, we are going to see a few of the green candles bouncing up and possibly affecting gold. So let's move on to gold. Looks like the ongoing short-term daily cycle in the ongoing longer-term intermediate cycle is, well, pretty flat. Looks like gold started this cycle somewhere at about 1670, coming up only up to 1765 or so, and we are now at the price of 1708. Cycle duration so far is 35 days, so I think it's not long until we finally finish the cycle and enter into the next bounce into the third short-term daily cycle in gold. Usually these cycles in gold last for about 1.5 months, so I would expect a bounce in gold coming up soon. Well, how does that agree with the US dollar? If the US dollar bounces up here over the next several days and continues its decline since it's pretty late in the ongoing intermediate cycle, then that might actually give us a short-term daily cycle low in gold relatively soon over the next few days, something that might poke through the low range of the Bollinger Bands again after our first poke was on the 3rd of June. And after that low, we'll probably have our last push higher within the ongoing intermediate cycle in gold, because by then that intermediate cycle will already be going on for 3 or more months, so it would be somewhere around its midpoint, meaning that there would be some chance of possibly turning back down relatively soon after that push towards possibly 1800 in gold. Looking at RSI, over the last about a week or so, we don't see a positive divergence in RSI yet. We see lower lows in RSI since late May, and we see just slightly lower lows on the price itself as well. So again, since there is no positive divergence, there is still a chance that gold might decline over the next few days. Of course, nobody knows the future. There is also a chance that gold just shoots up from here, but I don't think that scenario is extremely likely. Although it is quite likely, at least gold has already retested the 50-day moving average, and it's staying above that 50-day moving average. So I would say there is, say, a 40% chance that the short-term cycle already finished a couple of days ago, and there is probably 60% chance that we're going to see a slightly lower low over the next few days before gold rallies into the third short-term daily cycle. Next, let's have a look at GDX. And as I posted on my website on 3rd of June, I actually stopped out of GDX at 32.6. And in order to catch those notifications, those updates in time as a member at myfinanceteacher.org, make sure you subscribe to the new post alert. I send this email confirmation to every new member or new post alerts so that you know when I or my colleague publish a new post here so that you don't have to monitor the website all the time. So going back to GDX, since I expect gold probably to decline over the next few days, there is also a good chance that GDX might decline as well, but I don't think we're going to see a significant drop. Some of the support zones below the current price would be this 50-day moving average, that's at about $31.7, and there is also a chance that GDX is going to close this gap that's just around $31. The gap would be closed if GDX reaches 30.87. Gaps in price do have a tendency of being filled or being closed, so I think there is a pretty good chance that GDX is going to do that over the next few days. But again, as I mentioned for gold as well, there is on the other hand also pretty good chance that GDX is just going to shoot up from here, finally reaching that target of $39 that we've been discussing for a while. And if I see significant strength in GDX, I will of course get back into my positions. And remember, I only stopped out of 50% allocation, and I still have around 47% allocation to a range of gold-related assets. So whatever happens, make sure you stay tuned at myfinancesteacher.org. Now moving on to S&P 500, we've had a recent trade there as well. On the 3rd of June, again, I also reported that I took profit on my SPY at 311. The reasons for that are as follows. I think this early March high in S&P 500 is one of the resistance zones that might turn S&P 500 down, at least for a short term. The short-term daily cycle so far has been going on for 21 days. Generally, these last for about a couple of months. So although this cycle is still relatively young, we might actually see S&P 500 decline for 2 to 3 to 4 weeks, giving us possibly a regular duration after being rejected at this resistance zone of March highs. Besides that, we see that S&P 500 has already poked a few times through the upper range of the Bollinger Bands, and the 14-day RSI is quite close to overbought. And it's not overbought yet, so we might still see S&P 500 push up a little bit, but at the same time, I think we should be happy with the profits we've had so far since this bounce started in the second half of March. And near this resistance zone, we should probably be a little bit careful. Looking at S&P futures, so far they are higher than the price at which markets closed yesterday. So as I mentioned, there is also a chance that S&P might gradually push a little bit higher over the next few days before turning back down. Next, looking at XLE, as I mentioned in one of my older videos, in my energy portfolio in early 2020, I did have quite significant losses in crude oil itself before I switched to XLE. Since the second half of March, the chart on XLE looks a lot like S&P 500, and XLE as well is actually approaching its resistance zones. This huge gap that we see on XLE, somewhere around $38 to $40, is nearly closed already. And closing that gap was one of our targets. And if after completing this target XLE continues to push higher, the resistance zone above us is this late February low. That's somewhere at about $43.50. So in my personal portfolio, I still am holding XLE, especially having sold SPY. If stock market continues pushing higher, that might actually help XLE to push a little bit higher as well. But at any sign of weakness, I would be ready to take some profits on XLE. As we see, RSI is not into overbought territory yet, but it's not that far from overbought territory either. And XLE has poked once through the upper range of the Bollinger Bands a couple of days ago on the 3rd of June. So a continued push higher is still likely into the resistance zone. A few more pokes through the upper range of the Bollinger Bands before probably we're going to see a decline in SLE, especially as the stock market declines as well. Besides the stock market, what also affects SLE is of course crude oil price. Looking at crude oil, this is the spot price. It's hard to discern anything here. The spot price looks flat, even though percentage-wise the changes are of course significant. So one thing I would mention is crude oil is close to the upper range of the Bollinger Bands and is just below its 50-day moving average, which might prove to be some resistance zone, at least in the short term. RSI is still pretty far from the overbought territory, but again, we might see crude oil being rejected by 50-day moving average, at least in the short term. And instead of looking at spot prices, let's have a look at futures. This is July futures. And what we see here is RSI is pretty close to overbought levels. It's at 65.7. Crude futures are in the process of closing this gap just like XLE. So they might still push higher over the next few days. Closing the gap would happen somewhere at about $41 on the futures. That would also give us a poke through the upper range of the Bollinger Bands, at which time it will be quite likely that crude oil will turn around and cool off for a while. So for all these reasons, I am still holding XLE at the moment, but we have to be vigilant on energy as it's likely to give us a top, at least a short-term top, possibly over the next few days or 1 or 2 weeks. And last emphasis, another thing to be vigilant about is GDX, because I think there is quite a good chance of GDX actually retesting that $39 resistance. I'm looking forward to re-enter into larger positions in gold-related assets relatively soon. So we're going to keep our eyes open and stay tuned for the market updates. That's all for now. Have a nice day and good luck in your trades.